Hi everyone and welcome back to the channel. So today I am sitting at $191,874. A little bit of a later update this month, portfolio update this month because I was just waiting for the last dividends from VIU and VEE and they were just paid today inside of Wealthsimple. They haven't yet been reinvested, so a little bit of discrepancy from my spreadsheet, but those will be reinvested on Monday. But the dividends for September are sitting at $499, so just shy of $1 shy of $500. But yeah, so a very solid month. Of course, you have the monthly pairs and two quarterly pairs this month, so in VIU and VE. But it looks like next month we're going to have a bunch of other quarterly pairs to bring the total well in probably over $500. I think because then you have to subtract the VIU and VE from this one because I didn't program the spreadsheet to think that it pays like a month early. So yeah, as for the market updates, a couple um, key changes. So VEE has been shooting up a lot, like 10% the last month or so. Just insane the how much it shot up. So it's been really doing really good, as well as gold. So gold as well is at an all-time record high, I believe. So the actual price of gold in US dollars is in the futures market had gone above $2,700. But I think it's closed just shy of that. But yeah, needless to say, it's actually the best performing asset in my portfolio is my gold, and yet it's the smallest position. So, but yeah, I think gold is really doing excellently, and I think there's good reason for it. So maybe I'll get into that a little bit. So right now, you can see in Canada, the unemployment rate has been increasing steadily. And in August, we were sitting at 6.6%. And just from my just from hearing other people, there seems the unemployment rate really seems to be probably heading even higher. So um, we have fears of a recession probably coming very soon in Canada, given that the unemployment rate is increasing this rapidly. On the United States side, the numbers are a bit misleading, the headline numbers. Like they constantly revise like prior months, like with the jobs added and such. So um, I kind of like looking at the U6 measure for the US, which shows because right now like the official U3 number for United States unemployment is 4.2%, but if you look at the U6 number, it's actually been increasing significantly, and it's at 7.9%. So and for those who don't know, the U6 number includes like discouraged workers, people who want a job but have given up because they haven't been able to find one. So, and actually, the U6 number used to be the standard, like the headline unemployment rate for the longest, for quite a long time until um, more just recently. So, um, yeah. So, how's that tied back to gold? So, whenever you have fears of recession, um, you want to go into safe havens, and usually gold is seen as like a safe haven, not only from inflation but also from recession. So the stock market though is still trading at record highs, like most, like especially in the U.S. Side, but in Canada we're getting close to a record high, I believe on the TSX 60, or if not above already. So I haven't looked at that, but the the interesting thing about this is that the central banks have already started cutting the interest rate. So if we take a look at in Canada, the um, the Bank of Canada interest rate, we've already cut uh, two or three times. So from 5%, it was 5% in May. We cut to 4.75, then 4.5, and then in September we've cut to 4.25. So already a 75 basis point interest rate cut, but the stock market is still trading at record highs. Like usually these central banks, they wait until you see a bit of like um, pullback in the markets for sure. But I think they're like preemptively starting to cut rates even because the unemployment rates starting to become pretty alarming. And then if we look in the United States, In September, if we go to the Fed interest rate, it they cut 50 basis points all the way from 5.5 to 5. So yeah, so I think they're cutting like a little bit early just to make sure like the unemployment doesn't get too crazy. But the fact of the matter is that so this is why gold I think gold is going to continue to have a really good run is because if we take a look at inflation, the inflation rate, if I go to here year over year, I'll go there for Canada and then here for the United States. Prices, inflation rate year over year. Okay, so the central banks, their goal is to average 2% inflation over the long term. So, we've had multiple years now where inflation has been well above 2%. So we actually need to be below 2% for quite a while to really reach the Fed and the Bank of Canada's like 2% average 2% target. We could actually, what we, deflation we really welcome actually. So like I think this is a false sense of victory here. Like both Canada and the U.S. starting to cut interest rates. The U.S. The CPI still hasn't even reached 2% yet, but in Canada they might be thinking, oh yeah, we're good to start cutting rates. So I still think it's really quite early. I don't. I think they should honestly be thinking about increasing interest rates because the what's going to happen after this is I think inflation's really just going to, yeah, and this is, I think, a temporary correction in inflation. It's gone down, but now that they're cutting the rates, it's going to increase demand, and you're going to start to see the CPI start to take up, in my opinion. So, needless to say, I think that's a really good case for gold to continue to push forward. Gold's has had the best year it's had in like over like 40 years, I believe. I think it's like you have to go back to the 1970s to see a year like this good for gold, which is actually pretty crazy. So, yeah, I'm happy I took that opportunity last year and just like put like a little over 2 grand into gold. So, I'm up almost 32% on it. So it was a really good bet. But as for the other markets, so everything else has just been increasing steadily since the last update. Like it's crazy. Like the last update was, or yeah, I think it was last update. It was the first month since I've been doing these portfolio updates where my portfolio value actually decreased from the last update. And then now, I think it was 178,000, and now I'm over 191,000. Closing in on like only just over 8 grand to go and I'll be at 200,000. So it's just crazy how like these little pullbacks in the market can cause such a shift. And then a bounce back, like for me, like now, like with a portfolio size like this, it can mean like, over $10,000 month to month. So it's actually quite crazy. Like you just have to have a good, you have to be able to stomach volatility, especially if you're in equities. So yeah, as long as you just keep running, I think that we did really well. I think the international and emerging markets have still some really good value. VEE, despite this like recent surge, is still down I think over 10% since its all-time high. So I think there's still plenty of upside opportunity in VE. So it might be something to consider buying more of soon. But I'm still just sticking with investing in the cover call ETFs, ESPX and ETSX. For now, I'm just trying to keep increasing my monthly income towards the end of the year, because as soon as January rolls over, I'm going to start to withdraw income from it to help max out my other registered accounts, starting with the FHSA first in January. So yeah, so that's about it. Thank you guys for watching, and I'll see you in the next update.